Hey, what is up, everybody? Welcome to the Average Joe Dividends YouTube channel. Happy Monday, everybody. This is my first buy of the week. Every Monday, I deposit $100 into my taxable M1 stock brokerage account. That's what we're looking at right now, my Average Joe Dividends portfolio. And you can see the balance right now is just over $279,000. And the purpose of this video is to chronicle my journey with this dividend portfolio and showing you the stocks that I'm buying and selling, the dividends that I'm getting with a portfolio of this size. And just full disclosure, this portfolio is about 15% of my total net worth. I believe in having a foundation first of like an index, ETF, something like VTI or VU, something like that. Because you really can't go wrong with that, in my opinion. But the reason I do this is part of it is because of fun, why I have different holdings in this. And the largest holding in this portfolio is SCHD, which is an ETF that has 104 different holdings within it. I like to pick some of the other stocks that are maybe left out of that. And I also want a portfolio that concentrates a little bit more on cash flow. This portfolio pays more in dividends than, say, the VTI or VU, what I just suggested before. And I think it has pretty close to the same growth prospects of like an S&P 500 fund, maybe a little bit less, but you get a whole lot more dividends. And I like dividends because it kind of takes some of the guesswork out of when to sell things. And if you want to realize, income from it, I don't have to make the decision of when to sell shares. They're kind of sold automatically for me, and they're pretty reliable through thick and thin. And that's another thing, is I wanted to have some safe income to keep me afloat during, recessions and bad economic times. I don't want to be at the mercy of the market of when I can, pull the trigger in retirement or anything like that. I'm more focused on if I can have all my major expenses paid for, I'm good to go. So again, what we're looking at is this Average Joe Dividends portfolio. You can see over the last year, the money weighted return is just over 25%. And then I think this is including the dividends, everything, we're over 30% over the last 12 months. We'll look into last 3 months and up 8.6. We'll look at the last week, down just slightly at 0.26. I think today we're just down, a little bit. Pretty flat at 0.08%. So again, the reason I do the Monday video is I deposit $100, and where that $100 goes is based upon my actuals and targets for my allocations with these slices. I'll leave a link below so you can see what these slices are and all of the stocks within it. We can see the dividend portfolio portion. This is underweighted, so that is where the $100 is going to go. So look here in the activity log, we're going to see here's the deposit, the $100, but we have a buy for 107.21, and looks like the 722 was a dividend from Southern Company. What I've done is I'm going to reinvest that dividend right back into Southern. So one of the buys is right back into Southern. So I think 99.99 is going to go into these 3 buys. We'll see what they are. So it's going to be really 2 picks based upon my allocations. On Thursday and Friday, I do a video where I pick 5 stocks and put $20 into each of those. So first up, most of the money went into F&F, who recently actually did a dividend increase. I think it's 4% recently. So $77.09 went into F&F, and it bought me 1.24298 of a share, so over 1 share with that. And then Pepsi, well, actually, let's go to Southern Company. This is the dividend drip, so this didn't cost me anything really. It was just the dividends being reinvested. And right now, that's how I have M1 set up, is anytime I receive a dividend, the next opportunity where there's a buy, I can do a buy, it's going to reinvest it back into that stock from which it was received. I'm going to change my strategy up a little bit in 2025. I'll go into that possibly later or in another video. So the drip bought me 0.08501 of a share, but I'll show you the result of that dividend drip with Southern. It's going to make my next dividend higher than 722. It may be a few cents, but it increases it. So Pepsi, next one is where the other 99.99 cents went to. And $22.90, I bought more of PepsiCo, which is 0.14468 of a share. We'll go back here, and yeah, as you can see the cash, it couldn't resolve that 1 cent. It has to buy a certain amount, and that 1 cent just couldn't be resolved. So in a future purchase, that 1 cent will be resolved. So let's go on over to my Google Docs spreadsheet. We're going to do some activities over there, and but first let me explain the sheet. It has all of my positions from the average Joe dividends portfolio. There are 52 different stocks in there, including SCHD, like I said. You can see it's got a company, ticker symbol, the current share price using the Google Finance function. And then here is the average cost that I've bought into each of these companies. And it pulls this with a VLOOKUP in the M1 data tab. We're going to get into that in just a second. And then here are the total number of shares I own for each of these. And then here's the value. Here's my cost basis. And then here's my gain or loss, including the dividends paid out. And then here's gain or loss in a percentage. Anything above 25% will be in green. Here is the dividend per share. And these are all quarterly with the exception of Realty Income and BST in the blue. Those are monthly payers. And then we can see here's the current yield. Here's the yield on my costs. And the pay date, everything on this sheet right now is arranged by pay date. So once Fifth Third announces their new dividend, which will be in January, approximately January 15th, 16th, I'll put that new date in there, rearrange it, and then Fifth Third will go to that spot, but I don't think they've announced their new dividend. And then let's see here. So here's the dividends we have received so far. And you can see it, there's a difference between them. Like Kroger, the dividend was $5.24 that paid me on the 3rd, but the next dividend shows $5.27. And the reason for that is I took the Kroger dividend and reinvested it back into Kroger. And just that $5.24 increased my next dividend by 3 cents. Not a whole lot, but it does add up. So the sum of the dividends so far, $57.09. I'm expecting about $1,700 for the month of December. We'll see how accurate I am. It all really hinges on SCHD, which I think is supposed to announce their new dividend tomorrow. So I'm hoping for an even higher dividend. But you can see, like with Black Hills, 25.77, it went up to 26.03, etc. You can see how these are going to go up. Southern, since we just dripped that dividend back in, this is going to go up by a few cents. We're going to see that, as well as the two buys. With FNF here, the dividends would have been on the 31st, 10/15, and we bought these before the ex-dividend date, so we snuck these in before the next one, so we didn't have to wait till March or April for the increased dividends. So we're going to see what it's going to go up to from 10/15, 1702. It's going to go up. We're also going to see the monthly cash flow, quarterly and annuals go up as well. So I've hard coded those, and these are going to change in here once we update the sheet with the new fractional shares with those 3 buys. And all I'm going to do to update the sheet is grab some data from M1 in the holdings tab. And if you're curious to see what's in this portfolio, I'll leave a link below to my M1 pies. I'll also scroll through here. And like I said, SCHD is the largest position with over 3,500 shares. And then BST is the second. And then it really gets smaller with the individual positions here, with NVIDIA being my largest single holding within the portfolio. Of course, it was not, the cost basis is I think it's the lowest actually position, but it's my highest individual. It's just gone up that much for me. So I'll scroll down here so you can kind of see some of the names in here. Really just blue chip, household names like McDonald's and, Caterpillar, Pepsi, American Express, Home Depot, things like that. And we'll see what the smallest position is here. Lockheed Martin at the bottom. That's the smallest. So I'm going to go to the top. I'm going to grab everything starting in the name column, grab that data. And essentially what it's doing is I'm going to copy. I am grabbing the number of shares, the average share price, and the cost basis for all the positions in my portfolio. And I can automatically update that on my Google doc sheet by going to the M1 data tab. Of course, I had to set this up, and I'll leave a link below again to the sheet so you can see it. It'll only work if you have, the right companies. You'll have to change all the companies and all that kind of formatting. But if you use this sheet, it will, and of course, you'll have to delete the data that's all in the A column that I have. But I'll do a paste special here, and it's going to update the shares, cost basis, and average cost for the three stocks where we bought more fractional shares. In the case of FNF, there was more than a full share. So I think it was like 1.2 shares. So what that does is it automatically updates that. You can see by the cost basis. There's a VLOOKUP in the M1 data tab for those, as well as the average price, and see that VLOOKUP and the share price. No, sorry, share price is the Google Finance. Yeah, so it's average, the number of shares, and the cost basis. Those three are updating. Let's scroll over. We're going to take a look at the new values for Southern. Remember, that was the DRIP. So the DRIP, it's going to make the next dividend in March, approximately March 7th. Instead of 722, it's going to go up to 728. So there's three factors that really can bump up your dividend income. One of them is a DRIP. Of course, the other is just buying more shares or fractional shares with your own money. And then the next one is dividend increases, which requires nothing. It's just automatically you're getting more dividends the next time around. And you can see with Southern Company in April, that's when they usually do their dividend increase. Their last one was 3%. So just want to kind of point that out. That's what can increase. It's kind of triple power to get those dividends up, increase for each of your investments. So let's scroll down. We'll go to FNF and Pepsi. So with the FNF, was it $70 ish that went there? Let's go back here real quick. I know it's the bulk of it. Yeah, so it was 77.09. That resulted, so the instead of getting a dividend on 12/31 of 10/15, it's going to be 10/77 now. We'll take a look at Pepsi. It was less money. It was just 22.90, and then that increased. So on January 7th, 2025, instead of 17.02, it's going to go to 17.21. And let's take a look at the monthly cash flow average. We're going through from $1,006.43 to $1,006.72. And then quarterly, 3,020.17. Well, we were going from 3,019.30 to 3,020.17. And then we're going from the annual. So it's like the annual paycheck. You have like a monthly, quarterly, annual. And it's going to go from 12,077.20 to 12,080.68. You can see how it gets more profound compared to from monthly to quarterly to annual, because it's taking it pretty much times 12. The effect is only a few cents here on the monthly. So let's record that 1,006.72 to the monthly average dividend tracking tab. And we'll see if I put a new row in here for the Southern dividend drip and the $100 deposit, because those were the two events. Yes, Southern dividend drip and $100 deposit, and I believe it was at 1,006.72. It was. Let me put that in there. And I track every event, so whether there's a dividend drip, a deposit, or a dividend increase or decrease. So the results, the change to my monthly income with those two events, it added 29 cents of monthly income. That's every month going forward because of those events. You can see other things, and like when BST dripped, it was $3.52, and we're going to see a more profound effect with SCHD. Let's just take a look at that, and we'll see. So if SCHD has their same dividend. It was about 25 cents, and that was adjusted for the stock split. And we're going to see, hopefully it's like 27, 28 cents. That would be really great if it was for Q4. We'll see. But if it remains at 25 cents approximately, here's what I would be getting on December 17th. It'd be 899.65. So that buys quite a few shares of SCHD when it's at 28.90. So dripping that in is going to have a more profound effect than the event of today. And also, I still have BST getting close to that $500. That's going to have a bigger effect than it did the last time, because as I keep dripping this in, the BST dividend just keeps getting bigger along with the SCHD. Of course, that's until, with SCHD, that's until Q1 where we get the lowest dividend. So we'll see what happens there. So let's go on over to the dividend tracker tab. And I've been tracking this portfolio with the dividends from a dividend perspective since January 2021. That's why I decided to start doing these videos to kind of show you guys what I was doing with this portfolio, because I had a feeling that I was going to be building a portfolio like this in several $100,000. This one over $250,000. And I had a feeling I was going to do this and back it up and stick with it. And that's why I wanted to show this in video form. You can go back to my first video, and it really hasn't changed much my format. I really haven't improved my production. That's got to change. That has to be a New Year's resolution. Put myself on camera so you guys can see a face to it too. Kind of, I think that helps. Helps out a little bit. So I think for 2025, I'll start doing that, and maybe start doing a little bit more in production and giving you guys better content, because really all I'm doing is kind of the black and white, the numbers. And I think I can do a little bit more for you guys. So anyway, we're starting with January 2021. Let's scroll down and we can see where we're at right now in December 2024. Here's the dividends paid. Let me make sure I captured everything at 57.09. I thought it was higher for some reason. Let's see. Nope, still at 57.09. But tomorrow I'm going to wake up with a dividend from Amgen. I don't think it's going to be the 1510. Let's go take a look and see. I can show you on M1 how you can check that out and how you can see what your next dividend is going to be if it's surpassed the ex-dividend date, with which Amgen we definitely are. But I bought some more fractional shares of Amgen after the ex-dividend date. That's why I wanted to point this out. I know it's not going to be that amount on there because that's the high water mark. And it looks like I've skipped past it for some. There it is. There's Amgen. And most of the time when you go to the 1 month view, you're able to see the next dividend. So 1386 is my dividends earned. That's actually what I'm going to receive tomorrow. But then the next dividend in March 10th, if I don't buy any more dividend, well, actually that's wrong, because in December, Amgen, I'm expecting a dividend increase. Last year they did 6%. So hopefully they can do another 6% and boost this up. So it won't just be 1510 on March 10th. So let's put that 1386, because this is as good as in the bank. I'm going to receive it tomorrow morning, and we know what's going to happen. It's going to just drip that back in. That was 1386. Let's see if I put that in right. And so actually it's going to go higher than the 1510. So that drip tomorrow is going to happen. It's going to boost it to, we'll just say 1515, whatever it does. So it's going to be higher than that. And then I'm also going to get that 6% dividend increase approximately, we'll see, from Amgen, and it's going to boost it even higher. So I'm going to have two events in December. They're going to boost my next dividend, which will be paying in, well, after tomorrow, it'll be in March 10th approximately. So let's go back to the dividend tracker tab. And here's I also track it by quarterly. You can see all that. And here's the annual dividends received so far, almost at the 10,000. We're going to surpass 2023. It's going to be over 11,000 plus once we get the bigger dividends like the SCHD and BST in there. And here's the average monthly dividend. Like, again, I count this as like a monthly paycheck. And $1,006, that's the average, because most companies pay their dividends in the last month of the quarter, which is every March, June, September, and December. So December is going to be the big one. It's going to be well over 1,000. But when you average it out, That's what you get, the 1,672 with this portfolio. I take the quarterly and just divide it by 3 to get that smooth ride of this rather than seeing, this up and down, up and down. So we'll see. Here is the dividends we need to beat from last year, 1550. Like I said, I would bet a lot of money it's going to be over 17 unless SCHD has a surprise lower dividend than anticipated. I just don't see that happening. We'll see. I think it's going to be at least what was from Q3, if not a couple cents higher. And then here's my monthly increase. So I've increased the monthly income by $4.80, and we're only on December 9th, and that's a 0.48 month over month gain. Annual dividends, 12,080 like we had before on this sheet. And then we increased the annual dividends by $57.64 in December alone. And then we had a $100 deposit. So we're up to $300 in deposits. So to close out the video, we're going to go over my total net worth. Like I said, this portfolio over here, this is 15% of my net worth. I'm going to show you my, the basis, the foundation of my net worth. And it's built here really in like a Vanguard. You can see it's all in ETFs and IRAs and a taxable brokerage account. No individual holdings. You can see what they are. They're boring Vanguard low fee ETFs. And I have a total of 487,000 over there at Vanguard. Next up, this is my current employer I've been with since March 2020. I do not max out my 401k anymore. I did for a while, but I pulled back. And the reason is a couple reasons for that is I got divorced 2 years ago. So I'm pretty much responsible for I'm responsible for all the bills. So I just kind of want to get myself in a better footing, make sure I could afford, things which I can. But right now I'm also trying to build more into my taxable because I plan on retiring early. I'm 51 right now, and I would like to get out of the corporate world probably within the next year at 2 at the most. Or maybe work part-time. I could go a little bit longer, but that's it. So anyway, but sorry to ramble on that. But here's my 401k. It's an S&P 500 fund, nothing else. No bonds, nothing like that. So here I have an IRA at M1 as well. It's hard to switch back and forth without giving up personal information on M1. Otherwise, I'd do that. What I could do in future videos have just 2 windows open. Maybe I'll do that and show you, the VU, VTI, SCHD, because I like to show proof. A lot of people will tell you, oh yeah, here's my portfolio balance is this. Oh, really? Show me the proof. And same with the dividends too. That's why I do a monthly recap. Is a lot of people, and I'm not, trying to bash them, but they'll just read from a spreadsheet what their dividends were. I like to show the proof. Proof is in the pudding of, what it really is. And that builds trust, that what people are saying, they're actually doing it. I'm actually investing this money. I'm actually getting these dividends. And for me, it's working. So over here at M1, the IRA, that's at $723,000. This is pretty much my prior employment before my current job in 401k, and now converted to an IRA. And then here's my dividend portfolio that we went over in depth with the average Joe dividends, the 279. And then over at M1, they have a savings account. So I have pretty much a 1-year emergency fund. At Synchrony, I have a 6-month emergency fund. And over at Capital One, I keep 10,000. Actually, I just had to move some money over. No, other way. So I have closer to 950 over there. I had to pay some of my son's expenses, so I moved money over there. Oh, actually, it was 9,500. I moved about 500 over there and paid that off to Venmo. So, okay, so that's gone. So let's see here. So here's my home value, and then here is the balance on my credit card. I really just use one credit card. It has 2% cash back. Keep it simple. Has a nice, I think 10,000 or 20,000, so spending limit. I don't ever come close to it, so I just use this through the month and pay it off before it's due. Here's the current balance. So these are my liabilities here with the credit card and my mortgage, which I'm trying to pay off early. And then here's my total net worth, subtracting out the liabilities at $1,830,000. Here is the breakdown. Home equity, cash, even though home equity doesn't do anything for me really until the end. All it's going to do when I have my home paid for, it's going to lower my expenses. Of course, I'm still going to have property taxes and insurance, so that never goes away. But yeah, I don't like it when I like to listen to a lot of podcasts and a lot of personal finance shows, and a lot of people when they have like half or more of their net worth in home equity, to me that it's false. It's fake. It's fake net worth because it doesn't do a darn thing for you for building wealth. You can't sell bricks out of your home. You could take a HELOC, I suppose, but that's going to cause to have a you're going to be in a liability sheet with that. So to me, I may even remove this home equity. It's kind of clown net worth, so to speak, but I just put it in there for motivation to pay this down, really. And I want to see this number go down. So that's why I really kind of track that and put that number in there. But my net worth, if you take my home equity out, if you subtract $143,000 out of this, it's still a pretty solid net worth. You notice I don't count my car. That would to me that's just dumb to count that too. It's just a depreciating asset. I don't count collectibles or anything like that. It's just dumb. So here's the breakdown in pre-tax to after-tax. Don't get caught in the middle class trap, which is having all of your net worth in your 401k and your house. You have to have a taxable brokerage account, even though sometimes it's not the best tax-wise. It's going to give you the most flexibility. Having something like this gives me a lot of power to do whatever I want to. I could easily liquidate this, or this is taxable, this, pay off my house and live like a king for a couple years if I wanted to. I'm not going to do that. Pay off the house, yes, but I'm not going to, become a hedonist or something like that. So you can see here's the net worth tracking from like November on over. 2022 is when I really started tracking this. I think it's a good idea to track your expenses because you need to know how much your life costs before you can know if you've achieved financial independence. Let's see what the average Joe costs are. So I would need to have enough. Here's the sum. Let's look at the average. So 4527. Those are my average expenses. So if I could generate that or save up, every 4527 I save approximately is a month of freedom, is the way I'd like to look at that. So also track that gap there. You can see last month I had a gap of 718. Here's my closing net worth. I think it's important to track all this stuff to kind of, motivation and just see if you're making progress. I know some years some months, maybe impossible years, you could have some regression in the market. You really can't control it. Since I'm so heavily invested in the stock market, if we have another 2008, 2009, I could have some bad years. And I'm prepared for that. I've been through a few of these. I've been investing since, the first job I took that had a 401k, 1996. So that's when I kind of started investing in Y2K. That was like the first thing I saw, the bubble burst there. Then 2008, 2009, been through that as well as, of course, COVID. So, but I also watched the the investments kind of career of my dad, and him talking about just investing in the 80s with there was like a savings and loan crisis in the mid 80s. There was high interest rates in the very early 80s from the Carter to Reagan years. Things I remember those things. So and Black Monday, I think it was in 1987, things like that. But it seems like the market it's just rebounds after all those things. Just stay invested and invest more when those market crashes happen. That's what I did in 2020, even though it was hard to see my net worth was in many multiples of six figures lower. But I stuck with it, and that's one of the reasons. I started the dividend portfolio is because I thought things were on sale, and that's why I really started investing was in 2020 into this portfolio at least. So That's all I just share with you guys today. I know I kind of rambled today, but I think it's important to know these things. So again, my $100 that went into F&F and Pepsi, and now it's the dividend drip. Thanks everyone for sticking to the end of the video. If you got value from this video, please click the like button. Also subscribe so you do not miss future videos. Also leave in the comments below. Let me know what you're buying, what you think of these picks, or what you bought. I always like to see that and to see you guys' comments. So thanks again, everybody. Everybody take care.